Ren, it's on. It's on. And we're back.
We're back. We may need a better intro at some point.
Well, we'll figure that out. We don't do these things in a hurry. Do we?
Well, no, we start them in a hurry without planning a lot of them.
Yeah, that's true. And then just let it roll, see what happens. But yes, cheers.
Cheers.
Back again for an afternoon beer discussions.
That's it. Our third one.
For those that have just joined, the rules are one beer, one topic. First person to finish their beer has the right to hang up. Doesn't necessarily mean they have to, but they have the right to hang up.
Yep.
Should they feel that the conversation is going nowhere or they are bored, they also have the right to finish their beer as fast as they would like and move on to better things, probably cooking dinner or whatever that may be.
If they're bored, if they're bored, they don't like the conversation, or if they get asked a question that they don't want to answer.
True.
So, like, if I ask you how many cigarettes you smoked today, you could neck your beer and hang up the call.
And that would be the last time that we ever do this again, because that would be a flat out lie. So
you would need a cigarette after that.
Let's not bring this joke up on YouTube.
I'm considering
that the fourth rule for our afternoon beer discussions is that there is no editing, it's uncut, and it can get personal. So,
wow, this could be our third and final video, and also the end of Equity Mates.
If you've just joined us as well, we are from the Equity Mates Investing Podcast. Check us out at equitymates.com, and that's enough of a plug for Equity Mates for now.
So the other rule, which I'm not sure that you've touched on yet, is we only are talking about one topic per episode.
We did touch on that. Video. You've obviously had too many beers already.
Yeah, I've been practicing all week.
Yes.
But before we get into the official one topic, it's probably worth us just touching on what's happened in markets today. So after an extremely volatile year, down 30%, back up 20%, it seems like the last few days have been pretty soft. From its peak midday on Friday, the Australian ASX 200 is down about 6%. So who knows what's coming next? We released an episode on Monday asking, is the current market rise a bear trap?
Mm-hmm.
And we may have timed that
bull
episode
trap,
perfectly. Sorry, bull trap. So if people want to know what we're talking about, leave this form of our content and go to the audio form of our content. We're all good podcasts. Wherever you listen to your podcast, you can find us.
Yes.
And you can hear us have that conversation. But we're not going to have that conversation today because it's one topic per episode.
Yes.
So what are we going to talk about today?
One major topic per episode. I feel like we are going to have a few sub-topics. I just want to touch on the fact, Ren, that you are finally wearing an Equity Mates t-shirt.
I am. But unfortunately, I found out it's an old version.
You are wearing the OG of Equity Mates t-shirt.
Yeah. No longer available. No one can buy this.
No longer available because we did only make two.
Yes.
One of which is on your back at the moment. The second of which is in my drawer. But both are up for sale to the highest bidder. The current shirt that I'm wearing is also for sale at our website, equitymates.com. I think they're all in a box next to Ren at the moment. So
they are. And yet, even though I have all the new ones, I still manage to wear an old one.
I don't know how that works. But anyway.
I do.
Yes.
I'm fast and loose.
Let's move on, Ren. We woke up this morning to some pretty incredible news. I feel like one of the catchphrases that we've been hearing a lot of over the last sort of 8 weeks or so has been unprecedented times. And that trend continued today with the oil price, particularly the main oil price or benchmark price over in the US. We woke up to find that it had fallen to below zero, Ren, which
Yes.
is pretty incredible. Never happened in history.
First time oil has been negative.
Yes.
First time it's fallen over 100%,
Yes.
which is really just me repeating the
Yeah.
same thing. In
Any other way you want to qualify negative?
First time, yeah, no, I think people get the point. First time it's had a minus rather than a plus next to it.
So we woke up and the price for the May contract for delivery, which we'll get into in a moment, was negative $37.63 USD. I think it was, Ren. Yeah, negative 37.63. So that was a fall of over 50 US dollars from the previous price, and pretty incredible when, if you actually think literally, what that sort of signifies is the fact that if you were a trader of oil, you would be paid by the seller essentially to actually take on ownership of that oil. And there are reasons for that, but pretty incredible, and something that we have never seen before, and really threw markets and everyone into a bit of a spin.
Yes, yeah. So I think in this episode we'll talk about why it happens, and then why it happened, and then what it means.
Yeah.
Yeah.
Well,
so
you seem to be the bit of the guru on this, but you've been following the Saudi Arabia, Russia sort of relationship for a bit now, and probably can give a bit of a backstory to this better than I can. So do you want to shed some light?
Sure. Well, the first thing is, it's got nothing to do with Saudi Arabia and Russia. So
okay, well, I'll just finish my drink and hang up.
Nah, look, they're definitely involved in the stories. If this was going for an Oscar nomination, they would probably get supporting actor nominations.
Nice.
That coronavirus is the star of the show.
Yeah.
But even just to take a step back, there's a number of different oil indexes that are tracked throughout the world. So the one that we're talking about here that went negative was the West Texas Intermediate Crude, which you see shortened as WTI. And there's another one that went negative, which was, I think Mars US, I think it's called, but it was another US index. A number of overseas ones didn't go negative. So Brent is, I don't know. I don't actually know which one is the benchmark overall. I don't think there is like an overall standard, but I think if there was one, it might be Brent.
Yeah, I agree.
And I think that's UK based, and they didn't go negative. There's like an OPEC basket, which is the oil. Am I going to get this acronym right? Oil producing something countries. Anyway, it's a bunch of
Organization of Petroleum Exporting Countries.
Oh, you've done well there. You've done very well. This is what happens when you can't edit, I guess.
Yeah.
So I think that's 14 Arab Gulf states that sort of agree on production and all of that together. So there's a number of different indexes is really the point. And the US ones went negative.
Yeah.
So that's the first thing to just touch on. As you said, there's a long preamble here, and it might take more than one beer.
Well, that's not the rules, so you got to make it short.
No, so I'll make it short. So probably like a month ago, people might remember that oil dropped really sharply, and there was a lot of press around it. And really what happened there was OPEC, the 14 countries that agree on how much they're going to produce together, and then also Russia, which is a big oil producing country, had an agreement on how much they would produce. And if you think about why they're agreeing on that, it's just supply and demand. If they are all producing as much as they can, that will, and demand is relatively static. Like demand is pretty inelastic, which means it doesn't move that much when it comes to oil. You know, your airlines, your shipping companies, like your big oil users need oil regardless of what the price is. So demand is relatively fixed within a range. And supply is the big thing that will shift the price. So if supply is really high, that means the price will drop. If supply is constrained, the price will go up. And so it's better for all these countries to get together, form a cartel and say, we're only going to produce X number of barrels of oil. And it means that they can make sure they're all making money on the oil that they produce. And so OPEC and Russia, about a month ago, maybe 2 months ago now, their last agreement lapsed. And so then there was no agreement in place to regulate how much they were all going to produce. For those watching at home, Bryce's girlfriend just crawled underneath the camera.
Yeah, completely in shot, but that's all right.
And so, yeah, the oil price fell sharply because of that. But we actually saw about a week ago that they came to an agreement. Russia and OPEC agreed to cut their production levels by 10%, the largest agreed production cut in history. And so that seemed to all be squared away. But what really has driven the oil price to fall since and to go negative overnight was just the demand shock that coronavirus has caused.
Yeah.
The demand for oil has fallen through the floor. Airlines aren't flying. Cruise ships are definitely not sailing. Global trade has been slowed down, both because a lot of suppliers and manufacturers have shuttered their factories, but then also a lot of the demand from customers and other businesses has slowed down. So global trade is slowing as well. Less trucks on the road, less ships taking containers around. You get my drift.
Yeah.
There's less demand.
But another major issue on top of that, Ren, is due to the fact that there's less demand. There's only a finite amount of room in the world to actually store the oil.
Yes. So that's what has now happened is demand has slowed and inventories have built up.
Yeah.
And so, exactly to your point, Bryce, all their countries have filled their strategic reserves. There's literally tankers sitting on the ocean full of oil, trying to figure out where they can go. There's just nowhere to store it. Like that's the problem. And then what happened overnight was that for May, so oil contracts to be delivered in May next month, no one wanted to buy them. And then all these producers had all this oil that they were pumping, and they don't want to hold it because it costs money to store it. So then they had to essentially offer to pay people to take oil off their hands. Yeah.
It's crazy times. And you look at, the government, US government are suggesting that they have capacity for 75 million barrels to fill up their emergency oil reserves. But in the grand scheme of things, 75 million barrels, not a huge amount. And I think they can only take on, say, 500,000 barrels a day in that reserve. One of the largest storage facilities in the US is at sort of 60% capacity, and they reckon within a matter of weeks they're going to be full. I've been reading that businesses are almost just finding any nook and cranny they can to store oil at the moment, which is pretty phenomenal if you think about it. And to your point, Ren, this is the May contract. The June contract at the moment is priced at around $20, which still in the grand scheme of things is incredibly cheap for a barrel of oil.
It's about the cost of a beer at a Sydney pub these days.
I know. Well, yeah, geez. But interestingly, since the start of the day to now, so I had a bit of a squeeze before we jumped on, and Greenwich Mean Time, 1 a.m. in the morning was when this was written, but the oil prices recovered some ground and are now at $1.10, but that's capped because the issue remains the same, that there's nowhere to put it. So I think they've just brought it back above zero as a technicality, but have said we're capping that there because the unresolved concern around oil supply is very much still there. So I guess the question is, how would you think about this from an investing point of view?
So I'm thinking that we can solve two problems at the same time here.
Oh, hold on. Do we want to say this online? Because this could be valuable.
So there's a lot of unused retail space at the moment. and there's a lot of retailers
Definitely
and restaurants.
stop there. This is for a private conversation.
So what I'm thinking is the government help connect restaurants that are currently shut down with oil, with frackers and Saudi oil magnates who need a place to store their oil. We put the oil barrels in restaurants, and then the restaurateurs get that money to pay their staff.
But I love the idea, and that's trademarked and copyrighted and patented. The question is, and this may seem like a really dumb question, but what's the supply chain of oil in terms of getting the May contract here? Like, if I was a buyer or a trader of oil, and I now can't get rid of it, so I have to take the delivery. I'm literally going to get 20 barrels rock up at my doorstep that I personally need to find.
Well, yeah, probably not to you. They probably don't deliver. It's probably not like an Australia Post
DHL.
Star Trek,
Knocking on the
DHL delivery, and you got to sign for it. But yeah, essentially that's what it is. I think. So I haven't traded oil, but I sort of have some incidental exposure to some other commodities that are traded, and there's different contracts in terms of if you organize delivery or if the seller organizes delivery, and different stuff like that. And when chain of custody passes from one to the other, so potentially you need to organize it from the dock or whatever. But yeah, basically that's it. It's a commodity. Like, obviously we're an investing podcast and an investing focused brand. But if you think about what the point of a futures market is, it wasn't for investors. It was set up for primary producers and people buying those commodities to hedge their risk in a volatile market. And so, yeah, you hold a May futures contract for oil, you're getting a barrel of oil in May.
Yeah, it's happening. And a lot of, I would say, everyday retail investors who have bought into ETFs that trade these futures, unbeknownst to them, they've actually gone in and bought futures, and there are instances where they will have to somehow take on that oil. The one thing that I've been thinking about...
Well, I don't think ETF... Would ETF unit holders need to worry about that? Or would the ETF provider need to worry about that?
From what I've been reading, there are some instances where the unit holders, but look, I'm not going to speculate. I haven't gone into enough detail on that. It's a good question.
Mate, we've got in trouble with beta shares before for getting something wrong.
I didn't mention them at all. One thing that I've been thinking about though, Ren, is that if this situation had happened in a more normal circumstance, and perhaps not gone below zero, but hit $20 a barrel, then you would often see the share price of businesses that rely heavily on oil, as you mentioned at the start, like Qantas and
Virgin,
probably
Carnival Cruises
react favorably to this. And end of the day, their cost of business is going down. Can you think of an industry that would equally benefit from this, that isn't also being negatively impacted by the coronavirus?
Yeah, it's a good question. I mean, the obvious one that comes to mind are businesses like Toll and Linfox, the big heavy trucking companies, which have obviously seen some of their volume, their demand go down, but still have a pretty strong base because they're doing essential services, deliveries, supermarkets, hospitals, all that stuff. And they're probably their biggest input cost, or their second biggest input cost after labor, has dropped significantly. I think some of those big international shipping lines, not cruise lines, their volumes have been smashed already by global trade.
It's a tricky one. Manufacturers who use oil, but again, at the end of the day, if their products are sort of consumer facing and the supply chains have been hit.
Petrol stations, because they're not going to pass any of the savings on to us.
Dogs. Well, Rand, I don't own a car, so I'm not too concerned about the price of petrol at the moment. But I know you've got one of those massive US trucks out the front, those big
Yeah.
six-wheel utes.
With a big Texas flag on the back saying, "Don't tread on me."
Yeah. And I think you even have a barrel of oil in the back. But
And I'm not compensating for anything.
Oh, nice, nice. Well,
But I guess, yeah, manufacturers. I mean, there's probably heaps of. Look, every business is either directly exposed to oil or indirectly exposed to oil because their cost of inputs is affected by the price of oil. So I'm sure there'll be heaps of ripple effects, but
yeah,
it'll be interesting to see how long this lasts, or if the government starts opening up the economy again. Obviously, we saw New Zealand scale back one level their restrictions. We're seeing Trump get very itchy in the US, and a lot of protests happening with my fellow big ute owning brethren over in the US. And so who knows, like demand could normalize quicker than people expect. I know that even when May contracts went negative, December 2020 contracts were still trading at an okay price. So, I mean, if you really wanted to go deep on this topic, deeper than one beer would allow, you could look at the sort of the price curve as the months progress, because, May will be low, June will be a bit higher because there's more likelihood that demand will start to normalize, and so on and so forth. And so you could probably, chart that out or something and sort of look at where the market expects oil demand to really sort of normalize.
Yeah.
Yeah.
I guess the question to close this out, I've almost finished my beer. I'm not sure how you're going, but
I got one more thought. So ask the question, but I want to get one more thing in before I finish.
The obvious question that will come out from a lot of people would be, so is now a good time to buy an ETF that tracks the oil price? How would you respond to that?
I have, so potentially is probably the short answer, but I probably have an aversion to owning commodities when I don't have the expertise in commodities. And there's probably two things. One, the demand side, I'm not close enough to understanding what will normalize demand, like when the health restrictions will be limited, when manufacturing, when retail, when all these industries that rely on like trucking and shipping and all that stuff will start to be able to get back online. So the demand side, I'm not close enough to being an expert into understanding. But secondly, the supply side is not market based.
No.
Like the supply side is geopolitical and strategic, and there's a whole bunch of different things that are going on. Like it's the world's biggest cartel, the oil market, with OPEC and Russia coordinating their production levels. So I guess the answer is, if you are close enough to oil, or you've got the capital that you want to speculate on oil, it probably is a good time. Like, it seems can't really be a worse time.
Yeah.
But
no one
if you look,
would ever go negative though.
But I think if you're looking to buy, to talk about the philosophy that we talk about, we're looking to buy economic assets that can generate a return and take that return and reinvest it in whatever they're doing and earn a greater return over time. Speculating on the price of oil is definitely not
going to do that. Yeah.
Yeah.
I agree. I think there's more opportunity in taking advantage and understanding the impact that this has on businesses and finding opportunities there than, to your point, speculating on the price of oil. So that's how I feel about it at the moment. But your final point, Ren?
Yeah, my final point, I touched on the geopolitical aspect of the oil market. Oh, you finished your beer.
No.
Spit some back out. So I'll be quick here. The geopolitical aspect of the oil market is something that's really interesting to think about. So obviously, the Arab Gulf nations are big oil producers, Saudi Arabia, Iran, all of that stuff. Russia is a big oil producer, and climate change will probably help them find a whole bunch more oil in the northern part of their country as, ice sheets melt and all of that. But America has become a massive oil producer. It became a net oil exporter in 2018 or 2019, which means it exported more than it imported because of fracking. And fracking has just opened up a huge amount of oil in the US. And basically, rather than having to drill down in a well, they can also drill sideways and just get so much more oil out of the ground. But fracking is the most expensive oil to produce. Like per barrel, I think it's someone will correct me in the comments, I'm sure, but somewhere around $30 to $40 a barrel to produce a barrel of fracked US oil compared to maybe half of that for some of the cheaper producers around the world. And so what that means is when the oil price drops, the US shale producers go out of business first because their cost to produce a barrel is highest. So their business becomes uneconomical a lot quicker than a lot of the uneconomic, a lot quicker than a lot of the other producers. And so we're going to see a really interesting situation play out. Obviously, when prices are negative, no one can survive.
Yeah.
But Saudis, Russians, there's a lot of government support for their oil industry, or there's a willingness for the government to step in. Traditionally, the US has been more free market. Obviously, we've got Donald Trump in an election year who loves Texas and Oklahoma, which are massive fracking states. I think Pennsylvania, which is a big swing state, has quite a large oil industry. Correct me if I'm wrong in the comments, but there's definitely one swing state in the 2020 election that has a big oil industry, a big fracking industry. And so I'm really interested to see how Trump responds to this.
Yeah.
Because he loves oil and he hates renewables and his base are the same. And they're going to make it like a real red meat issue for the base,
definitely.
I think.
Yeah.
And so it will be really interesting to see
what he does.
If he bails out the industry, or I could see an alternative where the US government put a strategic or like national security directive in place that they can only buy US oil. They're like the US military, potentially US business, depending on what they can do, can't buy foreign oil. And that like creates this imbalance in the price of oil in the US for US companies and global supply. So look, I don't want to speculate on what Trump does, even though I just did speculate, but I think it will be interesting to see if demand stays low because of the coronavirus lockdown. Trump's feeling a lot of pressure from his base. These oil producers in, really important states and big states for him, where a lot of his base are located, are going out of business. And, a lot of Trump's economic miracle, or whatever you want to call it, in the last few years was driven by this massive expansion in the US oil industry. Like if you wanted a job, you could get a job at an oil field. So I'm interested. I think this will be a canary in the coal mine for a lot of things. The, geopolitical stuff, US domestic politics. I think, and also I guess if you watch the price, you'll see what the market's thinking about when coronavirus lockdowns will end and things will sort of normalize. So I think although I don't own any oil, it's an interesting market to watch.
Absolutely. I mean, it's a fascinating time to be at this stage in our investing journeys, and a lot to think about. And man, who knows what we're going to wake up to tomorrow? Trump could have killed the gold industry somehow.
I think apparently what we're going to wake up to is that Kim Jong-un might be dead.
I have been seeing these rumors, but let's hold that for another.
Honestly, I haven't seen it outside of group chats. I haven't looked at.
Yeah, I had a look at it, and it's circulating on front page of newspapers at the moment. Not dead, but in a critical health condition. So we will see how that pans out over the next 24 hours. But anyway, Ren, I think that brings us to the end of our afternoon beer discussions. If you haven't already followed us on our social channels, hit us up on Facebook, Instagram, and also join us on our show, Equity Mates Investing Podcast. And we also have a Get Started Investing. Yes, Ren?
I got one more point.
Is this a subtopic?
Right now we're drinking nondescript beers. As you can see, I'm not holding the label to the camera, although you probably can guess what it is. Bryce is drinking his beer out of a cup.
Yes. That's
if you want us to drink your beers, contact us. We are open to a full beer sponsor.
We're open for business. Not bad. On that note, we'll leave it there.